no one doubts these are extreme times we're living in. People are asking you questions all the time. What are people's main concerns about their investments at the moment?
Right, well, initially it was, when the crisis was full blown, people just wanted to sell everything, which was, it's obviously an extreme response. But then as the market sort of stabilised, we got a sort of more nuanced thing, and that's something I was quite impressed to see. People were asking, would it be a really stupid idea to increase my AVCs to my sort of pensions, or increase my regular saving? And that was very encouraging to see. But now the market has bounced back so strongly over the last couple of months, we're beginning to get people saying, should we be selling?
A bit of a roller coaster, really.
It is. And to be honest, what I've been saying throughout is pound cost averaging.
Ta-da! It's a bit of a buzzword with you.
Oh yeah,
three words: pound cost averaging. Yes.
Yeah, and basically, it's just a fancy way of saying regular investing. So basically, if the market's weak, you end up buying more. If the market's strong, you end up buying less. So say you're investing £100 a month on a regular basis, and the market drops by a half. Then your £100 a month is buying twice as many shares or units in your fund. And similarly, if the market had doubled instead of halved, your £100 a month would be buying half the number of shares or half the number of units in a fund. So it automatically means you're buying more towards the bottom and less towards the top. It's sort of buy low, sell high type of strategy.
But you're actually only investing the same amount all along, not having to worry about it?
Yeah, no, absolutely. People generally, if the decision is taken directly out of their hands, they generally relax about it a bit more.
I think that's the thing. People are beating themselves up about the fact that they feel they should be making sensible financial decisions. Is this possible?
Yeah, it is extremely difficult. And I think one of the things you don't want to lose sight of with this sort of thing, especially investing for long term, is that it's time in the market, not timing the market. That's a sort of old market law that, when you've had a big sell-off, for example, things do often bounce back very, very quickly, and it's impossible to get your mind around it quickly enough from sell everything mode to buy everything mode. So if you're regularly increasing your investments or regularly contributing to your investments, that kind of takes quite a load off psychologically. So, for example, my own situation, I increased my AVCs to my pension. But what I didn't do, which was more discretionary, was I didn't put the amount of money I'd got in cash in one of my pensions into the market, despite the fact that I've been precisely waiting for a setback in the market to put that money to work. So, by doing it the regular investing route, I did do the right thing, whereas I kind of prevaricated and made it excuses when it was talking about investing a lump sum.
So it's very difficult for anyone to call the market.
Oh, absolutely. It's difficult enough at the best of times. Even the professionals can't time the market. But in the current situation, you've got the central banks spending literally trillions of dollars supporting asset markets, bonds, and to a lesser extent indirectly equities. But at the same time, also normal individuals and institutions have got an enormous amount of money on the sidelines just waiting to be invested. US money market mutual funds jumped by $1.2 trillion in March as everybody was panicking. That means there's now $5 trillion in money market accounts earning next to nothing. So you can imagine that even if the market does have a stock market does have a setback, there are a lot of people waiting for that setback, hoping for that setback to put their money back to work again.
So how about people who don't think that they're investing at the moment and should be investing? Are there any hope for them at all?
Oh yeah, absolutely. Because at the end of the day, it's not how you invest, it's that you invest. That's really going to make the difference. And if something like pound cost averaging makes that decision more comfortable, then, go for it. Because A, it's impossible to time the market. B, in the current circumstance, we've got central banks investing lots of money in the market. We've got private individuals with the $5 trillion we were talking about sitting on the sidelines just waiting to invest in the market. And C, we know pound cost averaging works.
It does that.
So please click subscribe and ring the bell, and feel free to comment or make suggestions for topics for future podcasts. See you next week, and take care out there.